Why is everyone talking about UnitedHealth Group? This is the world's largest healthcare company by revenue. And as you can see, it currently is experiencing a drawdown of over 50%. And actually, at the time of making this video, after hours or pre-market, the stock is down another 6.5% because they're now, according to a Wall Street Journal report, under criminal investigations. Now, you can add that on top of everything else that's been happening with UnitedHealth Group in the last couple of weeks and in the last couple of months. So, is this a huge opportunity, an opportunity of a lifetime, or is this a value trap or just a trap? Well, let's discuss everything you need to know in this video. This is a company with a market cap of now $279 billion or so, trailing 12 months PE of 15.9 times, forward one 15.3. The average analyst price target still sits over $450. Margin wise, we're working here with gross margins of 22%, EBITDA margins of 8.8, free cash flow 6.1, and net margin of 5.4%. If we look at growth, compound annual growth rate, revenue forward 2 years sits at 10.4%, EPS sitting here at 5.1%, although well, it remains to be seen what will happen with the bottom line because, well, guidance for that has changed as well. If we look at the year-to-date performance for the stock, by the way, this is all available on FinChat. Thank you for sponsoring this video, but more on them later in this video. Year-to-date, the stock will be down, of course, closer to 50%, and we can see that just in the last month alone, this stock has gone down 50%. So, yeah, quite a haircut for such a, I would still say, quality business. Definitely one of the most popular blue chip names out there. So let's talk about everything you need to know. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. I really appreciate that. We're on our way to reach 100,000 subscribers. So if you're new here, hit that subscribe button. Thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so who is the UnitedHealth Group? And yes, I've made myself even tinier for this video. So UnitedHealth Group is the world's largest healthcare company by revenue, headquarters in Minnesota, United States. It operates two main businesses. One is United Healthcare, which offers health insurance and benefit plans to employers, individuals, and government programs, including Medicare Advantage and Medicaid. Then you've got Optum, that provides health services such as pharmacy benefit management, Optum Rx, data analytics and technology, Optum Insight, and direct healthcare delivery, Optum Health. Now, why is everybody talking about the company? Well, a couple of things. One, shocking leadership changes, as we've seen the last couple of weeks, suspend the 2025 outlook, Medicare Advantage crisis. Medicare Advantage saw care activity, doctor visits, outpatient care spike at twice the rate expected in early 2025. High-profile setbacks such as, well, the murder of the CEO, cyber attacks, ongoing investigations, and then legal and regulatory pressure on the company. Now here's a quick Q1 2025 summary. So revenue of $109.6 billion, up $9.8 billion year over year. Net earnings $6.29 billion and EPS of $6.85. Adjusted, that was $7.20. Operating margin of 8.3%, up from 7.9% a year ago. Medical care ratio of 84.8%, slightly higher than last year, meaning more medical costs relative to premiums. Cash flow, $5.5 billion from operations. Full year revenue for 2024 was just over $400 billion. I mean, think about it. It is a company that generates over $400 billion in revenue. Not that many companies on this planet do that. And net income of $15.24 billion. So here again, yeah, margin-wise, we're not working with a lot of it. And then they slashed their full year 2025 profit outlook. And for that, we can go back to FinChat here. Of course, we can go and read the whole transcript, but let's be honest, we don't have that much time. And so on FinChat, great stock research platform, you can just click on the Generate AI Summary and it will do that for you. Of course, afterwards, if you have more questions, you can just ask it any question here. We'll go and read through the whole transcript and answer that question. So They said the following: the medical care ratio is now projected to be, I'll zoom in a little bit, 87.5% plus or minus 50 basis points, reflecting higher utilization among senior populations and the patient mix at Optum Health. UnitedHealthcare still anticipates serving up to 800,000 more Medicare Advantage members, while Optum Health expects to add 650,000 new value-based care patients. Optum Rx revenue grew 14%, exceeding $35 billion for the quarter, with script growth of 3%. The company is implementing several strategies to address the performance challenges, including enhanced member engagement, improved health status assessments, and investment in physician clinical workflow. This was mid-April. Then, on May 13th, just a couple of days ago, they gave us a little update here. So, the conference call following the press release announcing Stephen Hemsley's return as CEO, replacing Andrew Whitty. So, again, changes here in management, uncertainties, the market just doesn't like all of these things. He addressed the company's revised guidance and performance setbacks. Hemsley apologized for the performance issues and emphasized that many challenges are within the company's control. The company suspended its 2025 outlook due to accelerating care activity and higher than expected medical costs for new Medicare Advantage beneficiaries. John Rex outlined 3 key factors driving the revised outlook: greater than expected impact from the health status of new UnitedHealthcare members, further acceleration of utilization within Medicare Advantage, and indication of a broadening trend to other areas, particularly among those with complex conditions. While the increased utilization is primarily on the outpatient and physician side, the company is prudently anticipating further spread. The company aims to return to its long-term earnings growth range of 13 to 16%. UnitedHealth expects to return to its target margin range in 2026, albeit somewhere within the 3 to 5 point range. Optum Health is focused on engaging with new patients to address their health needs and prepare for 2026. Hemsley emphasized the strength of value-based care and Optum's role despite the influence of V28. So here, okay, we got more information. What they're telling us is, well, for long-term investors, basically forget about 2025. Our focus will be on 2026 and onwards. Now, what else can we do here? On FinChat, of course, you know, this is a platform that does follow company-specific metrics, which you can find here on segments and KPIs. So like we said, this is a company that has 2 businesses, UnitedHealthcare and the total Optum revenue, or Optum as a whole. You can select that and you can see exactly what has happened over the past couple of years. You can do that with other things here as well: EBIT, revenue, other key performance indicators. It's not just for UnitedHealth, you can do this with many other companies, which I've shown you on this channel time and time again. So we're going to do that throughout this video. Again, thank you FinChat for supporting this video and started to support this channel as well. If you want to try it out, there is a link down in the description and in the pinned comment. New users will get 2 weeks of FinChat Pro for free. Then if you're interested to upgrade, you'll get 15% off. You help yourself out and myself as well. And I really thank everyone that has been using my link over the past couple of weeks. The support has been amazing, and hopefully your investing journey becomes better and better. Continuing here and more specifically focusing on the stock right now, the actually trailing PE after the recent drop, it's under 13. We're looking at the trailing one, not the forward one, because I mean, if we did focus on the forward one, it would have changed every other day. So basically just looking here at the trailing one, we're already seeing that it is extremely low. Yes, even a little bit lower than during that pandemic crash. Focusing on the business, we can see UnitedHealthcare revenue and total Optum revenue. So since December quarter of 2019, both of them have grown at a compound annual growth rate above 10%. So UnitedHealthcare has grown at a compound annual growth rate of 11.3%, while Optum revenue increased by 13.7%. Looking at operating income for each of those segments, UnitedHealthcare operating income increased by 19.2%, CAGR that is. Total Optum operating income increased at a compound annual growth rate of 5%. Now currently, if we look at the analyst expectations when it comes to revenue growth and EPS growth for the next couple of fiscal years, we can see that the market is expecting, as we've seen, revenue growth of around on average 10% or so, maybe a bit less some years, but EPS is expected to increase a bit faster than that. Again, with the company experiencing quite a lot of changes right now, quite a lot of turbulence, I wouldn't really take these projections at face value because I do expect them to change quite drastically. Same with the price targets. But right now for investors, what's important is to focus on what management is telling us, and then each and every quarter focus on the actual results. Because if there is a big difference between what management is telling us and what the company is actually reporting, well, then there is an issue no matter how cheap this stock might look. Looking at total United Healthcare medical individuals served since the December quarter of 2019, this has grown by 4.34%. It actually peaked here in March quarter of 2023. It did come down, it bottomed in the June quarter of 2024, and then we've made our way back up a little bit to, well, the quarter that they just reported. As for margins, free cash flow margins and a gross profit margin have come down, especially in the last 2 years. Usually we were flat-ish, above 23-24%. We're now closer to 22%, so keep an eye on that. As for free cash flow margin, well, we have been making our way back up, 6.1%. Previously we were a bit closer to 7%, but we did find a low here of 5.2% in 2024. This is always a nice metric to look at, revenue per employee. Over the last 10 years, it has grown by 12.2%. Not CAGR, just overall it has grown by 12.2%. So always a good metric to follow for each and every company, because we've seen a lot of companies, well, increase the amount of employees, but does that make any sense, right? Do these employees bring in extra revenue or not? You can see this by looking at revenue per employee, which you can also look on FinChat. And then over the last 10 years, they've been buying back shares, so total share outstanding did decrease by 4.51%. Now, last thing here is, of course, the freshest news. So UnitedHealth under criminal probe for possible Medicare fraud, according to the Wall Street Journal. The health insurer has been under pressure for months. On Tuesday, UnitedHealth Group CEO Andrew Whitty stepped down unexpectedly, and the company simultaneously suspended its 2025 financial forecast due to rising medical costs. The announcement sent shares plunging nearly 18% to a 4-year low. Stephen Hemsley, who led the company for more than a decade until 2017, is taking back the reins following setbacks, including the December murder of Brian Thompson, the CEO of its insurance unit, which catapulted UnitedHealth into the public consciousness. The DOJ's healthcare fraud unit is overseeing the criminal investigation, which focuses on the company's Medicare Advantage business practices, the journal reported, citing people familiar with the matter. While the exact nature of the potential criminal allegation against UnitedHealth is unclear, it has been an active probe since at least last summer. The DOJ spokesperson declined to comment to the journal about the fresh criminal probe. The department did not immediately respond to Reuters' request for comments. Last week, UnitedHealth said in a regular filing that it had been involved or is currently involved in various governmental investigations, audits, and reviews. In February, the journal reported a civil fraud investigation into UnitedHealth Medicare practices. The company had then said it was unaware of any new probe. In the same month, a US senator launched an inquiry into UnitedHealth Medicare billing practices, requesting detailed records of their compliance program and other related documents. UnitedHealth shares down about 40% for the year. The new investigations follow broader scrutiny into the Medicare Advantage program. And lastly, the DOJ earlier this month filed a lawsuit accusing 3 of the largest US health insurers of paying hundreds of millions of dollars in kickbacks to brokers in exchange for steering patients into the insurer's Medicare Advantage plans. Nearly half of the 65 million people covered by Medicare, the US program for people aged 65 and older or with disabilities, are enrolled in Medicare Advantage plans run by private insurers. The insurers are paid a set rate for each patient, but can be paid more if patients have multiple health conditions. Standard Medicare coverage is managed by the government. So, this is basically everything that you need to know, everything I know at the moment. Of course, these are developing stories, but it is definitely a noisy one. And so on the one side, I agree. This is a blue chip stock. This is one where previously it has done very well for shareholders. And currently, yes, currently it is in the middle of a huge storm, a hurricane, whatever you want to call it. Me as an investor, when I see these things, there is definitely a lot of noise, maybe an overreaction here as well. But usually when there is smoke, there is fire. And here I think there is already quite a lot of fire. Usually what I like to do is wait. Right? Wait, I know you're going to say, oh, are you trying to time the market now? No, not trying to time the market. But as I said, this is something that is changing on a weekly basis, as you can see. So there is no rush, right? Because if you think that this should be valued or go back to its all-time highs in the future, then you have time to see how, well, the new incoming, which is not really a new CEO, is going to try and turn this ship around. You can see how sentiment can shift and then start to make your moves. Of course, you can always open up a small position. If it goes lower and, well, the story changes, maybe for the bad, you can take out that small loss and move on. And if you see that the story is actually, well, the stock is continuing to go down, but the business actually is going, let's say, in the right direction, you can increase it, bring down your average cost. But to me personally, this is just too complicated for me right now. Too many moving pieces. I don't really understand this whole healthcare system in the United States, insurance, Medicare, Medicaid, you name it. I've talked about it in the past as well. It's just too complicated for me as a European, and probably for you Americans, you also think that this is just too complicated. Why can't we have a simpler system? Yeah, I agree. So yeah, there is definitely opportunities for sure. Definitely a lot of opportunities. Like I said, this is a company that generated over $400 billion in revenue. Yes, margins, it's not the margins of a tech company, but it's not like this is going to be a dead business tomorrow. It's just so that there are too many question marks and exclamation points right now surrounding this company. When things are clear, I think that would be a better time to really dive into this stock. So what do you think? Let me know down in the comment section below. I know a lot of you probably own it already or bought even more shares right now. Yeah, could be a very good move, especially if you have a long-term view. Short-term one, forget about it. Completely forget about it. So that's about it. Hit all the buttons, we really appreciate that. And check out FinChat as well down in the description and in the pinned comment. And I'll see you all in the next one. Bye-bye.